Stocks are being called the worst possible thing to own right now. And current economic news that's coming out is making things look bleaker and bleaker as we head to the end of 2022. Now, upon rising inflation numbers, the stock market has dropped nearly 1,000 points. The real estate market is set to collapse as the Fed tightens interest rates and restricts the money supply into a slowing environment. And analysts are looking at the bond market saying it's the worst bear market in American history. Now, current economic crises are rewriting the rule book on investing. Traditionally, American investors would lean on stocks, bonds, and real estate as a well-diversified portfolio. But in a post-pandemic world, all three major asset categories are experiencing incredible shakeups and losses. And with inflation numbers sticking around 8.3% as of Monday's revelation, we see that the Fed is increasingly getting more and more aggressive on their stance, with Jerome Powell actually coming out and telling the American people, look, we're making inflation our #1 priority. We're going to keep raising rates aggressively as we move forward, and we know that we're going to create a lot of pain in the marketplace. And in fact, American investors should really begin to prepare for that. Now, that is an incredibly aggressive statement from the head of the Fed, and when they come out and they express themselves in that way, it's no wonder that we see every major investment bank from JP Morgan, Morgan Stanley, Goldman Sachs, all coming out saying, we're downgrading US equities, we're starting to liquidate, and we're heading for safer shores. The issue is that is a vortex that you and I typically get caught up in as retail investors. In fact, Jamie Dimon, the head of JP Morgan Chase, came out a couple of weeks ago and he said, I've been seeing dark storm clouds on the horizon. I've been telling investors that they may or may not dissipate. Well, I've changed that. It's a financial hurricane that's inevitably heading for our shores, and we as a bank are bracing for it. It's time that the American people brace for it as well. It's a glaring statement. For all of this news to be coming out for that, the four major investment companies in our market, JP Morgan, Goldman Sachs, Bridgewater, and BlackRock, all getting out of US equities and starting to head for safer shores and warning US investors about this, gives us a really good idea of what's coming down the pipeline. Now, for investors that are still relying on the stock market, the market always bounces back, at least it has in history, but they should be prepared to hang on to their portfolios for the next 10 to 12 years, potentially to get back to current valuations. For anyone that's looking for a different way to do things, if you're getting worried about where the economy is headed, you want to get some risk off the table, what you need to be doing is not just throwing your money into the S&P 500, not just looking at normal stocks, bonds, individual companies, but starting to consider, where do you put your money in recession? Where do you put your money when inflation is as high as it is? And if you look at the 1970s and 80s, the way that we had calculated inflation, we're sitting at 8.3% officially today. But realistically, how we used to calculate that before we used the substitutionary method, we're actually about 18% inflation. It's dramatic. And at that stage of the game, the Fed had to raise interest rates to 20% above the inflation levels to get inflation to come back down. Well, today, let's just say conservatively, we're at 8.3%. We really can't raise interest rates above 5 or 6% because we have $30 trillion of government debt. We would bankrupt the economy, we would collapse the global markets. There wouldn't be much of a US left if we couldn't make our interest payments. And so what do? It's pretty clear that we're heading into a devastating recession by all accounts. That's going to cause a lot of pain for many investors. And so you really have to start looking at, where do you go to invest in a recession? What do you look at as far as commodities, as far as tangible physical assets that get you removed out of that system? And you really have to begin to ask yourself, as investors, where do you think the stock market goes from here? Where do you think the dollar ends up? We've printed nearly 40% of every single dollar in circulation since the beginning of American history in the last 2.5 years. It's incredible when you look at the numbers. And so where will the US dollar end up from here? Why is the government talking about a digital currency for the first time ever that they're beginning to want to implement, why do we see other countries, especially in the BRICS nations, beginning to make efforts to unseat the US dollar from world reserve currency, and where does that all end up? And so I think if you're watching this right now, if you're concerned about the economy, if you're beginning to ask yourself these questions, you really have to ring the alarm bells in your own life and begin to look at where do you actually go to invest in times like this. We'll get into some of that in this channel, but what I would posit to you is if you have thoughts, if you have questions, if you have ideas of where people should go to invest in times of inflation, in recession, please leave it in the comments below. Let's discuss this. Let's figure out where we should all be putting our money. See, physical, tangible assets start to make a lot of sense at a time like this. Gold, silver, real estate, things that are going to preserve your net worth. Now, there may be a time where it makes sense to get back into the stock market, but right now you have most investment banks talking about a major drop coming up still. So it may not be the place that you want to put your money. And what I would say to you is now is the time to think. Do your research, build community, and start making wise decisions. I'm Makai Block with Limitless North. Thank you for watching, and I'll catch you on the next one.